Hey everybody, today I thought I would talk about how earning investment income is different than earning income from a job. And I was kind of surprised. I recently had a conversation with another engineering buddy, and he previously, before talking to me, had no idea that income from investments actually had tax advantages as opposed to income from a normal job. And the tax advantages are great. So the basic idea is that there's a certain amount of income you can earn and pay absolutely 0% tax rate on an investment. And you have to consider you get a standard deduction. If you're married filing jointly, that's $30,000. And then your next income up to about $94,000, this is the year 2025. Any income that you earn up to that amount from an investment, whether it's a long-term capital gain or a qualified dividend, you pay 0% in taxes. Now, most of us have regular jobs unless you retired early, so you have to use your W-2 income first. So like, let's say you earn $50,000 of a normal job income, and then you had another $50,000 of investment income. Well, you have to pay normal tax on your job income, but then because your investment income is below about $124,000 when you count the standard deduction, you just paid 0% tax on that investment. If you're in a higher earning job, let's say you earn $100,000, then considering that standard deduction, you only have about $24,000 of investment income you can earn before you have to pay some tax on your investments. So I mentioned a couple terms: qualified dividends or long-term capital gains. A long-term capital gain is like if you bought a stock or something else and you owned it for longer than a year, it's considered a long-term capital gain if you sold it, and that's favorable tax treatment. A qualified dividend is paid from a company, typically in America. You have to own, I think, the stock for 3 months or 6 months or something like that before the dividend becomes qualified. But then once it starts coming to you, you could potentially pay 0 tax on that dividend. So it's a great thing if you're trying to reach financial independence and retire early, because as you trade your W-2 income for investments, once you quit your job, you have, and assuming you're married, you have $124,000 of potential income through either dividends or capital gains you can pay 0% tax rate on, which is really amazing. So after that, it's still favorable. So the next bracket above, they call it the $94,000 rate, but you got to consider your standard deduction is in there too. So after you cross over that $94,000 without the deduction or $124,000 with, you just pay 15% on any long-term capital gains or dividends, and that stays true up to about $600,000, including that standard deduction. So that's a huge income that you're paying 15% on. That's very different than the normal tax brackets for W-2 type work. So you can conceivably, become a millionaire if you have a couple million in your investment accounts. You sell them, long-term capital gains or dividends. The first $124,000 is 0% tax. Then up to $600,000, you just pay 15%, which is much lower than the average person. And then the upper end of that bracket, if you earn over $600,000, just 20%. So again, that's still a lower tax bracket than most Americans working. So you got the 10% bracket, 12%, then it goes to 22%. So in investments, you'll never pay more than that 20% on. So after the 22% bracket, I think there's 24, 27, 30 something, up to 37%. So investment income is much more efficient, and you can certainly look up these tax brackets. If you want to do a Google search on tax rate for long-term capital gains, tax rate for qualified dividends, it'll teach you about how these things are taxed. And you have to use your W-2 income first before these other things count. If you're getting Social Security, that goes first before your investment income. There's a few other things that are counted, like interest income is counted as part of this, and some others. But learn the tax codes, because it could make a huge difference in your willingness or desire to invest, and then be able to have these long-term capital gains or qualified dividends. So take a look at that. They've definitely opened my eyes about the tax advantages of investing, and not a lot of people know that there are different tax rates for investment income as opposed to your W-2 income, because we live in the W-2 area and we pay taxes every time. So take a look, something new to learn, something that's helped me over time. I just wanted to share it with you. None of this is financial advice, just some things I learned that have been interesting and have helped me. We'll see you. Bye.